Thank you, Aman. Good day, everyone, and a warm welcome to Ester Industries Q2 and H1 FY21 Analyst and Investor Conference Call. We have with us today Mr. Arvind Singhania, the Chairman, and Mr. Pradeep Kumar Rustagi, the Chief Financial Officer. We will begin this call with opening remarks from the management, following which we will have the floor open for an interactive Q&A session. Before we begin, I would like to point out that some statements made in today's discussions may be forward-looking in nature, and a note to this effect has been sent to you in part of the invite earlier. I would now like to invite Mr. Singhania to make his opening remarks. Over to you, sir.
Thanks, Kevin, and thank you everyone for joining us today. I have alongside me Mr. Pradeep Rustagi, our CFO. I hope all of you are safe and healthy. I will begin the call with key highlights from each of our businesses, following which Pradeep will walk you through our financial performance for the quarter and first half. To begin with, I am pleased to report that we continue to build on our business momentum. Revenue and profitability both grew at a healthy clip during Q2 on the back of stellar performance of the film and engineering plastics businesses. Let me now talk about the individual businesses, starting with specialty polymers. While performance during the current year is likely to be subdued primarily because of COVID-19 related restrictions in customer markets, the business fundamentals remain structurally sound, and we expect strong recovery from next year onwards. Business momentum is slowly picking up steam following challenging Q1, which was disrupted by COVID-19. But for COVID-19, performance of specialty polymers SBU would have been much better than FY20. We are very encouraged with the introduction of 3 new products, namely LMC03, low melt, cationic diable master batch MB16 and the deep diable master batch MB07 in recent weeks, and expect these products to contribute substantially going forward. Commercial sales have already started on a small scale. These products find applications in textile/carpet industry and are expected to contribute significant volume starting very soon. We are already witnessing revival in demand for MB03. Demand for innovative PBT continues to remain strong. We have already achieved in the first half sales of 535 metric tons as compared to sales of 465 metric tons during FY20. Innovative PBT finds applications mainly in consumer electronics currently and is now being propagated for other applications such as automotive, textiles, cosmetics, etc. The fundamentals of the specialty polymer business are strong. We expect sales revenue upwards of rupees 150 crores with EBIT margins in excess of 40% in FY22. Given that specialty polymers is an IP technology-driven business, and secondly, it is largely patent protected, which acts as a very strong entry barrier. Moving on to our film business. Film business continued its recent momentum on the back of strong demand from the end user industries. COVID-19 pandemic appears to have had positive effect on the film business, with a growing number of customers preferring more packaged products for health, hygiene and safety reasons. Stronger demand resulted into improvement in sales, volumes and capacity utilization. Domestic demand has been growing at a healthy clip of 11 to 13% annually in recent years, which has translated to steady margins. Additional capacity created on account of commissioning of 2 new lines in FY20 were absorbed with minimal disruptions, as I had already mentioned in my last call. We are also working towards improving our product mix by close to doubling the share of value-added products to 30% by end of FY22 from 16% at present. Commissioning of the offline quota during the previous quarter was a step in this direction. Higher proportion of value-accretive products will enable us to improve margins and profitability of the film SBU. We expect the demand momentum to continue over the years to come, and in line with this, we have started setting up a new film manufacturing unit through a wholly owned subsidiary in the state of Telangana to help meet growing demand of domestic and international customers. As informed in earlier calls, the project will be judiciously funded through a mix of debt and equity. We are in advanced stages of tying up funds, both foreign currency and rupee term loans for the project. The overall cost of debt for this project is expected to be about 6% per annum. We are targeting to complete this project by June 2022. The commissioning of the new line will provide a further leg up to the business and help drive revenue growth. As far as the plastics business is concerned, COVID-19 adversely impacted the performance during Q1 FY21. However, the revival has been sooner and stronger than I expected, demonstrated by substantial improvement in volume of sales and margin in Q2 FY21. In fact, Q2 FY21 has been the best quarter both in terms of volume and margin in the history of the SBU. Like film business, we are working towards improving the product mix for this business. We are confident of a much better performance of engineering plastics as view going forward. To conclude, I would like to state that we remain confident about prospects. We see significant headroom for growth across all our businesses. While film and specialty polymer business are structurally well placed with strong demand visibility, engineering plastics business would start delivering steady performance and contributing meaningfully to the overall growth of the company going forward. Volume offtake for most of the products in the specialty polymers business is improving. We expect the business to deliver good growth over the coming years following pickup in demand for established and emerging products. Film business as well is expected to perform well basis strong double-digit growth in demand. Further, our efforts towards improving the product mix as well will have positive effect on the performance of film business. That concludes my opening remarks, and I hand over the floor to Pradeep to walk you through our financial performance.
Good afternoon, everyone, and thank you for joining us today. I'll quickly walk you through our performance for the quarter and first half, post which we can begin the Q&A session. Starting with the quarter, revenues from operations stood relatively stable on year-on-year basis at rupees 251 crores as against rupees 254 crores generated during corresponding quarter last year. However, one needs to consider Q2 FY20 included revenues worth rupees 16 crore from sale of chips as against zero revenues during the current quarter. Adjusted for that, we would have delivered growth on a year-on-year basis. For the first 6 months, revenues stood at rupees 439 crores as against 538 crores reported during H1 FY20, lower by 19%, primarily owing to COVID-19-led challenges which impacted revenue during Q1. EBITDA for the quarter stood at rupees 73 crores as against rupees 46 crores generated during Q2 FY20, higher by 58%, on the back of better margins in film business and significantly improved performance from engineering plastic business. For H1, the same stood at rupees 126 crores as against rupees 100 crores garnered during H1 FY20, higher by 26%. Finance cost for the quarter stood at rupees 4 crores as against rupees 7 crore outgo reported during Q2 FY20, lower by 43%. On a half-yearly basis as well, the same declined by 43% to rupees 8 crores as against rupees 14 crore. As of September 30th, 2020, our outstanding interest-bearing term debt, net of free cash, stood at rupees 65 crore, while interest-bearing working capital liabilities stood at rupees 32 crores. Interest-bearing debt, net of free cash, as a multiple of annualized EBITDA, stood at a healthy level of 0.39 as of 30th September 20, in comparison to 0.8x as at 30th September 19 and 0.47x as at 30th June 2020. As mentioned by Mr. Singhani earlier, we are committed towards maintaining better than prudent debt tangible net worth ratio. Investment as equity into the wholly owned subsidiary will not materially alter our gearing ratio. The overall cost of debt for this new project would be about 6% per annum, as we plan to take advantage of low-cost euro-denominated foreign currency loan. Depreciation for the quarter stood at rupees 9 crores on a half-yearly basis. The same stood at rupees 17 crore. Profit for the quarter stood at rupees 46 crores as against 19 crore generated during Q2 FY20, higher by 139%, while on a half-yearly basis, the same stood at rupees 75 crore against rupees 43 crore reported during H1 FY20, higher by 74%. To conclude, I would just like to reiterate that our business momentum is now picking up steam across all the verticals. Film business continues to benefit from favorable demand-supply dynamics and strong demand growth. Especially polymer business as well is showing encouraging signs with steady demand for most of our products. Volume for MD03 as well have started to pick up gradually. We continue to remain positive on the business and expect significant growth in the coming years. Engineering showing improvement is expected to perform well going forward. Thank you.
So should we open the floor for Q&A?
Yeah.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question at this time, they may please press star and 1 first question is from the line of Rahul Natkani from SR Industries. Please go ahead.
Yeah. Sorry. I'm actually, just to correct, I'm an individual investor.
There's a lot of background noise from your side. We can't hear you.
Can you hear me now?
Yeah.
So my question was, just to correct, I'm an individual investor and not from Ester Industries, just to clarify. My questions are in terms of, first question is relating to the films business, polyester films business. So in this, in the investor presentation, you have mentioned that the polyester film chips revenue has been zero for this quarter. So is it like this business has been totally discontinued?
No, it has not been discontinued. It has only been discontinued for a short while. In any case, this was just to fill up capacity. It doesn't deliver us very high margins. It just, we have spare capacity in chips, so we sell it and we make a couple of bucks. So it's not really a very meaningful bottom line provider.
Okay, so it's just about the whichever spare capacity minus spare capacity that remains, you utilize it for that purpose.
Correct.
Okay. My next question is in relation to the new entity that you have formed and the new project that you're coming up with. I understand there is an increase in the project cost by around 87 odd crores. So in that, I wanted to understand there were two figures which were appearing in terms of, as on September, there was an amount of around 28 crores, and as on 26th October, there was a figure of 75 crores. So I just wanted to understand, is this completely equity or this is the investment which is made?
Okay, so this is the equity which has been given by Ester Industries into the wholly owned subsidiary, and there has been an increase in the project cost, which was earlier estimated at 500 crores, is now about 585 crores. This is largely on two accounts. Number one, that we have increased the land area that we have taken, and a better location has been chosen. So the price of land per acre is higher, and we will be able to accommodate more number of lines going forward. So this has increased the investment. Number one. Number two, there will be an upfront payment for the euro loan that we are taking of about 15 crores, which is built into the all-in cost of 2%. So that amount was added on of 15.8 crores. And then the third is because of the depreciation of the rupee versus the euro, and some more equipment which was underestimated has been added on. The project cost is now frozen at 585 and will not undergo any further increases.
Okay. So in terms of out of that 585, what would be the debt quantum and how much of it is tied up as of now?
Okay, so the equity from Ester will be 175 crores. The equity will be 175 crores, and about 400 crores will be the debt in the wholly owned subsidiary.
Okay, and the 75 which is done till 26th of October is entirely equity. No debt drawdown has been made till date.
No. In the wholly owned subsidiary, no debt has been taken.
No debt has been taken. Okay. And then my next question is on engineering plastics division. There has been a significant improvement in terms of, if I look at on a quarter-on-quarter basis, in terms of this business, which was a laggard for the company as a whole. So what exactly has changed? If you can throw some light on this business.
Well, two things happened. Number one, there was a lot of pent-up demand because Q1 was horrible for this SBU, and so volumes were substantial. We were geared up to take care of this volume. That was point number one. We also took advantage of very cheap raw materials which are available in Q1 because prices across the globe had fallen for all materials, and we took advantage and we bought very cheap raw materials which gave us a lot of success for the SBU. And auto and electrical segments have picked up tremendously, especially too.
Okay. And just to understand, in terms of if the investment in the wholly owned subsidiary was around 28 crores as on September, and on 26, so within 26 days we made an incremental investment of 50 crores. Did we have that sort of a cash on our books as on 30th September?
Yeah. How else will we make the payment if we don't have the cash?
We had, and
Yeah. Hello?
Hello?
Yeah.
Hello?
Yes. That's how we made the...
Yeah, so I guess...
Sorry, Rahul, I would request you to join the question queue for any follow-up.
Sure. Okay, thank you.
The next question is from the line of Viraj Mahadevia as an individual investor. Please go ahead.
Hi, Mr. Singhania, Mr. Rustagi. Congratulations. Good results. I'm a relatively new investor, but I'm trying to understand the story a bit better. Can you give me a sense of the expected revenue growth going forward? Obviously, we've had a growth in profitability, but it's come largely from the cost side of the equation. So can you give us a sense as you think about the next 1 or 2 years of how you see revenue growth at a consolidated level for the company?
Well, let me put it this way, that first of all, the margin improvement has come because of the margin improvement in film largely right now. And then, of course, in Q2, engineering plastics has contributed as well. Going forward, let me give you a number that by FY23, at exit of FY23, we'll be at a run rate of about 2,000 crores per year.
Right. Okay. So one can backwork the numbers in terms of annual growth rate.
On a consolidated basis.
Hello?
Yeah.
Are you thinking double-digit growth rates then, in general, over the period?
Well, we are at about 1,000 crores right now, and for let's say FY24 full year, we'll be at about 2,000 crores.
Okay.
So
we'll double our turnover in 4 years' time.
New film plant will be commissioned in June of 22. That will also add to the revenue.
Understood. Second question, Mr. Rustagi, for you. When I look at the margins, 29% in Q2 of FY21 versus 18% in the same quarter last year. After 11% bump up in margins, how much of that has come from mix change towards specialty polymers, raw material benefit due to crude, or thirdly, any other cut in operational expenses? Can you give us a sense of the breakup in these three buckets?
The improvement in margin is only on account of the margin improvement in film business, because as we have been telling in the past, in film there is a pass-through model. Any movement in the raw material price is passed on to the customer. So the demand and supply situation determines the margin. So the improvement in the result is on account of improvement in margins only.
Understood. If I understand you correctly, it's not on account of RM because that's a delayed pass-through, but it's largely operating leverage and mix.
It is a leverage coming out of the demand supply, because we were running our film plant at almost 100% capacity. So there is not much room for increasing the production. So it is the demand and supply.
The film has improved, and that is what is showing the result.
The margins in films have improved.
Yes.
And is that because of operating leverage again, or what has changed there?
No, demand supply.
Yeah, so essentially you've had greater demand for your products, and consequently for the same level of operations, you have greater supply.
We are restricted with supply. We don't have capacity.
We are running at
full capacity.
Right. So then how do you see improvement in margins if you're already running at full capacity?
Prices have gone up. The difference between selling price and raw material has increased. The value additions have increased.
So value addition has increased on account of mix, etc. Okay, understood. Thank you very much.
Thank you. The next question is from the line of Himesh Satara from Sequent Investments. Please go ahead.
Yeah. Hi. Thanks for the opportunity. So my question is, what is the revenue potential that we are looking from the new facility that will come in from June 2022?
Engineering plastics?
Yes.
The expansion is in film business.
The expansion is in film business.
No, sorry. Yeah, correct. I mean, from the film, the new facility that we are starting from June 2022 in the film business. So what is the revenue potential that you are looking for?
About 500 crores at full capacity utilization.
At full capacity. Okay. And so this MB16 also, we were on our way to receive few commercial orders. So have we received any commercial orders for MB16?
Yes. It's already started. So this was the old MB06 which used to report in our presentation. This has now been renamed as MB16.
So any amount that you could quote?
So we've already received our first order. It has been executed. It is being run by the customer. The first trial has been very successful. They are now running a larger 18-ton, and this material is expected to be approved. And once it is approved, we will start doing larger volumes immediately.
Okay, that's it. Thank you.
Thank you. The next question is from the line of N.M. Modi as an individual investor. Please go ahead.
Yes, sir. Good afternoon, sir. Thank you for taking my question. Sir, my query is regarding investment which we are going to make into subsidiary. So the amount of loan which we will be providing to them, will we be charging any interest on that company?
We are not providing any loan to the subsidiary. It's all going as equity.
Oh, by way of equity only?
Yeah.
They will loan in their books.
Loan component they will be arranging themselves. That company will be arranging themselves.
Absolutely.
Right, sir. Thank you.
Thank you. The next question is from the line of Arnav Kapoor as an individual investor. Please go ahead.
Thank you, Mr. Singhania. Thanks for the opportunity and congrats on a great quarter. I had a couple of questions. One is on the SP business. There seems to be a decrease in the margin. Guidance had been approximately 35% blended. Would you say that are we trying to sell more at the expense of margin, or do you feel for the net year we'll be at 30-35% from a margin perspective?
No. So basically, the margins in SP business in terms of per kilo has not changed at all. It's only that our volumes have fallen because of COVID. Once the volumes come back, the margins will go back up to the same number that we have fixed. Because fixed costs remain fixed.
Got it. Okay, that's very helpful. And from the engineering plastic division, I think this question also came in earlier. There's been a margin improvement, and you also mentioned in your opening commentary that it's been the best quarter. What's been the current capacity utilization, and do you think can it sustain? And anything you've also mentioned that you're looking at expansion. What is the overall driving for this bullishness that you have on the EP business going forward?
You see, the auto and the electrical segment has shown a tremendous rebound in Q2. We expect this momentum to be maintained going forward, and we are also looking at investment because we are looking at relocation of the plant, which will help us in serving the customers better and reduce our costs substantially, because there's a lot of logistics costs involved because of our current location. Bringing in raw materials from the port all the way up north and then distributing it all over India. So we are looking at an investment to relocate the facility with a new extruder, additional new extruder to take care of growing demand. And it is fully justified because the relocation itself will increase EBITDA margins by about 3%.
And the current capacity utilization is about more than 70%.
Okay, got it. So it's capacity utilization plus the cost optimization that you're looking for.
And the investment in the engineering plastics business is not very large. It's very, very small. So including relocation and a new extruder, the total cost would be under 20 crores.
Okay.
And the savings will more than justify this.
Got it. Okay, that makes sense. And just two last questions, if I have the opportunity to ask. The BOPET spread you'll expect, the spreads you expect them to maintain, between 50 and 60 throughout this year, and also going forward. Do you expect that to fall or any increase in that, or you expect that to sustain?
I think it will sustain for the next 18 to 24 months, at least.
Okay. And just one final question, given the second wave of COVID and, in at least in the northern hemisphere that we are seeing, do you expect, that to impact your SP business, at least given that it's coming from the US entirely? The revenue in 2020 was about 73 crores. We expect 75 CR still to happen in this year, barring the second wave, if that comes through or not in the US at least.
So basically, in the specialty polymer business, only one product got impacted, which was the MB03. We've already seen revival of that business starting to happen, and we expect this to continue. That kind of lockdown, what we saw, and the panic that was created in the first quarter, we don't expect that. Whatever be the COVID situation, I don't expect businesses to shut down and be under lockdown the way it happened in Q1, because no country in the world can afford closures anymore. Business has to run as usual, and plus the expectation of the vaccine coming is going to ensure that business returns to normal faster. So we don't expect any negative impact from COVID anymore. And in any case, as far as the SP, like I said, SP business was only impacted on the MB03, no other product.
Thank you. Mr. Arnav, request you to join the question queue for any follow-up, as we have several participants waiting for their turn. Thank you. The next question is from the line of Faisal Zubair Hawa from HG Hawa and Company. Please go ahead.
Hello.
Yeah, please go ahead.
Yes.
Question, please. Yeah, can you pass the question, please? Another one.
All right, thank you. The next question is from the line of Ajay Bodke from Prabhudas Lilladher. Please go ahead.
Good afternoon, sir. So you mentioned in your interaction on CNBC that the spreads in July, which had gone up to 75 levels and subsequently come down to 50 levels. What is your estimate about the spreads going forward in film business for the next 6 months? That's the first question. Secondly, in specialty polymers, for FY22, you're given a guidance of 150 crores and a margin of 40%. What kind of revenues are we looking at in FY21 for specialty polymers, and what kind of margins for the full year one should bake in? And lastly, if you could just dwell on the demand-supply dynamics in the film business. Have any new lines come up since the start of the financial year?
Can I ask you question by question, because 4 questions.
Certainly. Yes, sir, certainly.
So I have mentioned that the spread in film will remain between 50 to 60 going forward for the short to medium term, and I maintain that.
Okay, sir. So in the specialty polymers, what kind of revenues should one bake in for FY21 and margins?
FY21 should be about the same as last year, 70 crores, maybe 60 to 70 crores. Largely hit because of MB03.
Okay, sir. And because MP303 mainly goes in the restaurant business, whether the carpets are used or film multiplexes.
It's a commercial carpet application.
Commercial carpet. Okay, so you expect that business to come back in the second half in America and in Western America?
It has already started coming back earlier than we expected, and it will. So we have lost half the year, and therefore we have had a substantial loss on that business in this current year. If this hadn't happened, if COVID hadn't happened, we would have been in excess of 120 crores in the SP business in FY21.
Okay, sir, thank you. And about the demand-supply dynamics in the industry?
This will rebound, and I have given a clear guidance that FY22 we expect our turnover to be in upwards of 150 crores with margins of 40%.
Yes, sir. So and lastly, on the demand-supply dynamics in the film business, have any new capacities come up, sir, since the start of the financial year in the industry?
No new capacity has come up in current year, in the current calendar year of 2020, and the next capacity expected to start up is around September, October of 21.
September. And how much would that be, sir, capacity?
40,000 tons approximately.
2 lines.
There's a second line, I'm not sure, because they've all been delayed because of COVID.
Okay, sir. So thank you very much. Sir.
Thank you.
Thank you. The next question is from the line of Sonal Kohli from Bowhead. Please go ahead.
Congratulations on your numbers. I have a couple of questions. Firstly, on your packaging business, how is the joint demand doing? And, considering new capacities will take a while to come, you said September 2021, how would you service your growing demand in India? I guess the demand is growing at 13%. So, in the exports as an industry and company in particular, and, would you be able to re-export again once, new capacities in the industry come in?
Yes. So you're absolutely right. There will be a change in dynamics between the domestic and export. And once the new capacity starts coming, we can always increase exports again. Zari demand is back to full almost.
And so where are currently margins higher, and due to these recent COVID cases like we saw in July and August, do you expect restocking in Europe to increase for packaging products, or this time the prepared, so we may not see that kind of situation?
With the revive, I think whatever the COVID scenario, we expect that the stocking situation will again take the previous shape what we experienced in first quarter.
So you expect stocking could go up in Europe, because of this?
Yeah, because originally stocking was done to at least continuity on essential goods supply. So things normalized, and then the stock levels were reduced. And with the second wave coming in, of course, that scenario has to come back again.
As
but the extent would be different than what we saw earlier.
Sir, as far as your product mix in packaging is concerned, in terms of value-added and non-value-added products, can you give some idea incrementally, let's say, going forward, how much more EBITDA or revenue you could make because of, this business, let's say in 2021 and 2022, as compared to your normal, non-value-added business, and how this mix could change over the years, let's say, 2021, 22, 23, as compared to FY20, a very broad direction.
So I said that, the value-added business will give you additional margins of about anything between 50, let's say on an average 60 rupees over and above plain film. So if you do 4,000 tons per year more, it will give you about 24 crores.
And so, is this what you are, and when would you expect this 40,000, on a quarterly run rate basis at least, 10,000 kind of number to start, contributing?
10,000, I'm sorry, your numbers are wrong. 30%. So we are already at about 16. We are already at about 16%, 17%. By March, we'll reach about 25-26%. Exit rate.
So, sir, what I was trying to understand in terms of incremental volume, like you said, 40,000, is that the incremental volume you're talking about? And
40,000, by when? 4,000, not 40,000. We said 4,000, sir.
Sorry, 4,000. So, what I'm trying to understand, let's say your profitability packaging business was, let's say, 100 rupees in the preceding quarter, which has gone by. When do you think, because of your, what could be the profits, let's say 12 months down the line, just because of change in product mix? That's what I'm trying to gauge right now, and what could be your medium-term direction?
I'm giving you exact numbers, that it will be approximately 25 crores more because of this particular coated business.
Over the next 12 months. Have I understood
Over the next.
Correctly, sir?
Once we reach full capacity utilization, which we expect to reach by March.
Lovely. And sir, as far as your specialty polymer is concerned, do you expect Q4 to be a bigger quarter than Q3? And how do you expect the mix between existing and new products for 2022? I guess you've got some new patents as well, and would you, we've seen a guidance from your side for FY23, etc., So how are you building those estimates, and what gives you confidence? Are these, is it like, you're adding new customers, or are you meeting only small part of the demand of existing customers, and you have some kind of visibility from them that, they would increase the offtake from you, or is it you're betting on success of new products, or is it a mix of all of these? We're just trying to understand, because it's a very high growth rate, and trying to understand the probability of, success in that business, and the various moving parts. So an elaborate answer on, what gives you that kind of confidence for a 300-400% growth rate will be very helpful.
It's very clear. It's a mix of all three. Number one, we expect our MB03 to come back next year substantially. Number two, the three new products that we have introduced are going to start giving us volumes. And number three, we expect the innovative PBT to increase volume substantially next year, and this is all based on clear guidance by the customers.
So innovative PBT, we already have done 535 tons in first half as compared to 465 tons last year.
Against a contracted volume of 400 tons per year. So this year we expect to cross 800 tons, and next year this will be in the region of 12 to 1500 tons.
So new products, revival of MB03 and innovative PBT.
And sir, as far as this business is concerned, would we reach saturation of the markets in FY23, FY24, or how big is the pie? How conservative or aggressive are your assumptions in context of the size of the pie and the number of customers you still have to tap, or your existing customers? Let's say if they do 100 volumes, what are you catering to them currently for those kind of products? Are you expecting 100?
Okay, let me answer that, Sonal. I've understood your question. Let me answer that very quickly. Here we are creating the pie. There is no pie to take a slice from. We are developing new products and creating a new pie to eat.
Okay.
So, as per the current visibility, we are very confident, as we have mentioned, we are very confident of doing upwards of 150 crores in FY22, and by FY24 or 25, we will be at about 400 crores revenue with 40% plus EBIT margins.
So, sir, as far as the existing products are concerned, have you, I'm not talking about the new products, the market which they cater to, have you taken, they scratch only a small part of the pie, or, just I'm trying to get idea about
the small part. Again and again, I keep telling you, this is a patented product. Nobody else can supply this product.
We have 100% share.
We have 100% share.
So, sir, okay, let me rephrase my question. I understand it's a patent product and that's why it's a high margin. What I'm trying to understand is, let's say the end usage industry where your products are introduced, what kind of penetration have you achieved in those products, and how big the potential pie, let's say over a 5-year period, could be for your existing products. So let's say you cater to a particular industry, because yours is a new product, obviously it takes time for the usage to increase. So what is the level of the penetration?
It's a very long answer. If I have to go product by product, Sonal, it's a very long answer.
Your key 1-2 products. That's it. Existing products.
Okay. MB03, we are estimating to sell about 1,700 tons by 50. We should do about 14 to 1,500 tons next year, 1,700 tons in FY23, and it could have a potential of going up to 3,000 tons per year. But I'm not factoring that in. That is not factored in. I'm only stopping at 1,700 tons.
Sales at 400.
On IQ PBT, it's going to continue to grow year on year. So last year we did 450. This year we expect to cross 800. Next year we expect to do about 1,500, and this will keep growing incrementally every year and could reach 4,000-5,000 tons in the next few years. Then as far as MB16 is concerned, we are talking with one customer for 3,000 tons per year. This could grow to 6,000-7,000. But I'm not factoring 6,000-7,000. I'm only factoring 3,000 tons, but I've got clear guidance from one customer. On the MB07, I have clear-cut guidance of 1,000 tons from one customer. We are in talks with another customer for similar volumes. So, and there are various other, and then LMC03, which is our hot melt adhesive. We are factoring only about 5,000-6,000 tons by 24-25. This has a potential to go up to 40,000-50,000 tons if it's a super hit in the market.
Thank you, Mr. Kohli. Request to join the question queue for any follow-up. The next question is from the line of Faisal Zubair Hawa from HG Hawa and Company. Please go ahead. Hello, Faisal. So I think there's a disturbance from his line. We'll move to the next question. That is from the line of Shailendra Agarwal from Agreya Capital Advisors. Please go ahead.
Hi, Mr. Singhania. Congratulations for a good set of...
So Shailendra, your audio is breaking, so I request you to speak a bit loud, please. No, it is still breaking.
Just a moment. Hi, Mr. Sonalia. Just quickly wanted to understand from you.
Shailendra, you're not audible. Shailendra, may we please request you to join back in the queue and reconnect?
I will circle back. Thank you.
The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yes. Thank you for the opportunity. Sir, firstly, you spoke about the new lines of 40,000 metric ton coming up in September 21. Is it correct, sir, for the film business?
That's what we understand.
Okay, sir. And that is from your competitors?
Yes, one of our competitors is starting up. It's expected to start up by September, October next year.
That is the biggest player. Jindal Poly will be the one that will be commissioning it next year.
No, I don't believe it's Jindal Poly.
Okay, sir. Then can you correct me, sir? Which if we take the peer comparison in terms of capacities in the pecking order, sir, the players, the Indian players, sir.
Jindal is the largest.
Okay.
In polyester film, followed by SRF, and then Surat Metallics and Backmet.
And so where do we rank, sir, in that pecking order?
We have a capacity share of about 9% in
order 5th to 6th.
Yes, I think we would be in the fifth to sixth category. There are many players in our capacity range.
Okay, right, sir. Sir, can you give, sir, color on how the raw material basket has shaped up for the
raw material has been rock steady since March, and there has been a small increase in the last 2 weeks.
Okay, sir. Is it in the PTA prices or the MEG prices?
Both have increased, but marginally.
Marginal increase.
What has been the price trend, sir, for MEG and PTA, sir?
PTA is at about 40 rupees 50 paisa per kg as of now, and MEG is about 40 rupees per kg.
And month on month, for the month of October, you are telling me this price?
For the month of October, average would be 38.5 PTA and 38.5 MEG.
It's been a marginal increase only.
Marginal increase
has been there, sir. And so looking at what the world scenario is currently, do we anticipate any inflationary trends coming in the raw material basket, or these trends are going to continue?
We don't expect any major upward trend, but even if it happens, it will be a pass-through model, so it doesn't matter.
This is our discussion with the PTA MEG suppliers. We don't expect.
Right, sir. And sir, about this engineering plastic segment, sir, this was a cause of concern, and it was, even if I'm not wrong, we were interested in the putting on block also going forward. If correct me on that front also. So, sir, as the auto segment trend has changed and the segment started reporting better numbers, and you are currently looking for relocation of the plant from the current site, sir, for engineering?
Yes.
Okay. So, sir, what are our plans, sir, currently? Where are we shifting it, and where are they housed currently?
It is housed in Uttarakhand in our plant of Ester Industries, where all the facilities are. And we'll move to a more conducive location where we will take full advantage of logistics cost and reduction of logistics.
Okay. And what are the synergies between this film and the engineering plastic segments? How do these two segments?
Zero synergies. There's nothing in common.
Nothing. So it can be hived off also going forward also, sir, when we become a major player in the film segment, we can look for hiving off this segment into a separate entity altogether.
Yes.
That could be the case, sir.
Yes.
Okay, sir. And on the real estate front, sir, you were earlier looking for your real estate to be also sold. Office.
We are trying, but it's not happening.
The market is not.
If you could find me a buyer, I'll be very happy to talk to you.
Okay, sir. The market is not currently.
No, it's very bad. Real estate market is very bad. Commercial real estate is very bad.
Commercial real estate market is very bad. But sir, going for the next half also, sir, the type of the quality of numbers we have, which now we are getting quarter on quarter, sir. How confident are you that for the H2 also, this at least this trend can continue? I mean, the numbers which we have posted for Q2 won't be just a luckily number have come up because of XYZ reason, but it is on a sustainable basis we can report numbers of this absolute numbers going forward also, sir.
Let me put it this way, that largely we hope and expect that half 2 will be similar to half 1.
Thank you, Mr. Kapoor. Request you to join the question queue for any follow-up. The next question is from the line of Mohammed Patel from Blue Banyan Advisors. Please go ahead.
Good afternoon, sir. What is the peak sales that we can do on the engineering plastic side?
We can do about, on an annualized basis, we can do about 14,000, 15,000 tons.
In terms of revenue?
Value.
It could be about 220 crores.
Okay.
220 to 230 crores.
Okay. And what is the peak sales that can we do on the specialty polymer segment, roughly?
There is no limit to that.
Okay. No, on the current capacity.
We have to build the market. As we keep building the market, we'll keep selling.
Okay. Understood. And you say that 3% margin increase after that relocation. So is this based on Q2 margins or is it on the normal margin?
This has nothing to do. Relocation is a cost saving. It has nothing to do with current margins.
No. Okay. No, you said there will be 3% saving in the margin. We will increase the margins by 3%.
We'll increase the margins. By relocation, we'll save costs. That's how the margin will increase.
Understood. So this increase will be on the average EBITDA margins that we have done historically or on the Q2 base?
It's a cost reduction.
Okay. Understood. Okay, thank you. My question.
Thank you. The next question is from the line of Surendra as an individual investor. Please go ahead.
Hello. Good afternoon, sir. Congratulations for very stellar performance of the Ester Industries.
Thank you.
Sir, my question is about that just now you told that you are relocating that engineering casting business. This will be happening in FY21 or in FY22?
It will happen in FY22.
FY22. Sir, one more question is that our film business, right now we are running at 100% capacity utilization. Is there any opportunity for outsourcing the film?
Sorry, say again?
Is there any outsourcing opportunity for Ester Industries to source the film and then market?
No question.
Okay. Sir, one more question about this specialty business. So just you are saying that our 150 crores turnover will be in FY22.
Yes.
This will require any further capital expenditure?
Marginal, nothing great.
Okay. That's all. Thank you, sir.
Thank you. The next question is from the line of Aniruddha Thakre as a shareholder. Please go ahead.
Yeah. Hi, sir. I just want to understand, looking at this are you looking for any new product development for this vaccination or for any opportunity in this COVID-related market?
No, I'm not in the pharma business, so even packaging, no.
Okay.
Thank you.
Thank you. The next question is from the line of Ajay Borke from Prabhudas Lilladher. Please go ahead.
So what were the exports for the current quarter? And how do you see the trajectory in the medium term for exports in the various divisions? Thank you very much, sir.
Okay. Specialty polymer is all exports. There's nothing in domestic. Girish?
30%.
About 30% of the volume in film will be exported. And in the engineering plastics business, it will be a very marginal number of exports, maybe about
5 to 10%.
5 to 10%.
And then are the realizations in exports on par with the domestic realization, or are they better?
In specialty polymer, everything is export, so there is no comparative.
No, I'm talking about the film business, sir.
Yes, it's comparative.
Okay, sir. Thank you very much, sir.
Thank you.
Thank you. Next question is a follow-up question from the line of Rahul Nadkarni. As an individual investor, please go ahead.
Yeah. Can you hear me?
Yes,
please.
You can.
Yeah. So my question was on specialty polymer business. So we have an innovative PBT contract, right, for 400 tons from global chemical player. So that is supposed to be renewed in some time. So are there any talks in terms of what is the quantum? Do we see any increase in quantum in terms of renewal, or when will we get a confirmation on the renewal piece?
I've already mentioned that we've already got a indication for increase in volumes to about 12 to 1500 tons next year. So contract renewal is only a formality.
Okay, so we have a commitment on at least the contract might follow, but around 1200 tons is the number.
Yeah, 12 to 1500 tons for next year.
Okay, that was the first question. My next question is in terms of the euro loan which you are planning to take. One, what is the quantum of that loan? Is the entire debt would be foreign denominated euro loan, or do we have a domestic component as well?
So there would be rupee term loan also. The rupee term loan would be about 160 crores. Foreign currency loan in rupee terms would be about 250 crores. And 175 crore would be the equity investment from Ester Industries. So that's how the 585 crore will be funded.
Okay. And in terms of the 250 crores, would it be completely hedged, or you will have natural hedge by way of your exports?
We have a natural hedge by way of exports.
Thank you. The next question is from the line of Rajesh Ainar from ITI Long Shop Fund. Please go ahead.
Hello.
Hello.
Yeah, thanks, sir. Thank you for the opportunity. So my question was on the polyester film business, which is basically it's a global commodity, and in India also we have SRF and few other players. Now, what makes you so confident that the margins would sustain? Now, why I'm asking this question is again there can be the pricing is global for these kind of products. So globally, anywhere if the capacities are coming up, that can put pressure. Another thing is, a company like SRF, they have been saying that they expect the margins to become softer because of with global capacity additions, which they might be more aware of, obviously. So that's been one of the things they have been sort of repeatedly guiding that we are at the peak, and it's a cyclical business. So packaging film business, let's say for SRF, I have to see there was period in FY2012-13 when even the negative margins were there, and then it suddenly shot up. So we are at the peak of the cycle, or where exactly we are? Just wanted your thoughts and outlook on that.
I've already mentioned that the margins will remain between 50 and 60 rupees for the next in the short to medium term period.
Okay, but you don't see any risk to these margins, or
In the short to medium term, no. In the longer term, as capacities come up, there could be a softening of some margins, but not immediately.
So even you think globally also we don't see any great capacity additions. Obviously you'll be more aware because we don't come across.
Capacity additions are going to continue to happen in this business because globally there is a demand growth of about 6% per annum. So capacity additions will have to happen to cater to increase in demand.
Okay, and domestically also, most of these players have plans for capacity addition. So even when our capacity comes up, you don't see that there could be any bunching up of capacities in maybe 2 years down the line.
There could be a short period where capacities get bunched up. That's definitely a possibility, but it's not happening for the next 2 years.
Okay. Understood, sir. Thanks a lot. That helps.
Thank you. The next question is from the line of Yash Joshi as an individual investor. Please go ahead. Yash, your line is unmuted. Please go ahead with the question. Yash, your line is unmuted for questions. If you can hear us, please unmute yourself and respond. Since there's no response on the line, ladies and gentlemen, that was the last question for today. I now hand the conference over to the management for their closing remarks. Thank you, and over to you.
Thank you very much, ladies and gentlemen, for joining us for the earnings call for Q2 FY21, and we look forward to seeing you all again after the next quarter. Thank you.